Hello everyone. I hope you're doing very well today. It is the 4th of May 2020. The Bitcoin halving is very close by and the capital markets are in a very pivotal place. There's opportunities abound, so let's have a look at them. Yes, the total market cap chart, it's actually as clean as it can get. I've been saying it time and time again. This chart is absolutely spectacular. The way it holds levels and hits targets, and basically we've hit the 260 billion target. There was potential to go for that 279 to 80. And you can see that we have hit 1, 2, 3, 4, 5, 6, 7 green weeklies in a row. That is absolutely spectacular. That is what a reversal smells like. It just kept going with all the disbelief, and last week you knew that we were very bullish considering the kind of candles we were printing, and we've made a really good impulse. If you are following me on Twitter, I did warn when price was actually topping, when BTC was close to 93 or 9400, was warning people to be able to protect their gains, because this had been a nice move, guys, and it needed a breather. And what we've done now is we are opening up the potential to get our first corrective weekly. So let's quickly go to the daily time frame. And what do we see on the daily? Basically, we have tested this weekly once before, and we've built a bit of a structure. So this 233 level is quite key, and it's being tested for the second time. I think if it's tested again, we open up the room to come down to this 220 225 level. But essentially this would still just be a corrective structure until proven otherwise, because this is essentially the move we got on the daily time frame. If you look at it, so it's just straight from about 200 billion to 260 billion. That's 30 billion or 30%, for the entire market cap of a space. So it does need a bit of a corrective structure. If quickly, let me just pull out some fibs right here. So it lines up really well with this 220 level. If price can get a correction from here, which would mean possibly another 7 to 8% before getting a decent reaction. So essentially for now, this is what I would be looking for. We were thinking that yes, shorts are there to be taken, and we were taking shorts up here, yesterday BTC was giving some kind of a decent reaction, so there was potential that it would play out something, but price has proven itself. For now, we are building a double bottom, so I do expect that there would be some kind of a reaction here. Let's just quickly go to the 1 hour. So the first move was a 786 retrace. The second move was almost a 618, and this third move has been the most impulsive out of them. So let's see if we can get a retest of about 240, or even the golden pocket level of 241 242. But even if we can get a retrace of 240, these highs or a liquidity grab from here would be a nice place to be able to manage risk for further downside, because this is looking like a strong move, guys, and you can see the kind of structure we broke out of. I highlighted this on BTC itself, but alts outperformed BTC on this move down. So this total market cap is reflecting that, because BTC has not reached its lows yet. So nonetheless, I do think that this move still would have more legs. I'm looking at this 220 225 level on the total market cap. So looking for somewhere around 240, 241, 242 for a place to manage risk for further downside. If it's too weak, it might even start grinding at this 382 level, guys. If it does, then you would know then this is the place to be managing risk from, and you could play this for the further projected move. Here's the altcoin market cap chart. We had targets about 7 to 12% moves. Last time we did exceed it by 3 or 4%, but nonetheless really spectacular to have caught those moves. If you were following me on Twitter, you did know that I was warning you at the top and cautioning you of downside, and you can see that we've had pretty nice moves to the downside as well. Currently about 10% down from the top with a lower low, a lower high, and another lower low. So I mean, odds are reflecting big weakness, guys. I mean, these are pretty strong moves that we've had to the downside, very impulsive, and it's still like the total market cap looks like we should have continuation to the downside. And potentially, yes, there is this support at 75 billion, but it is probable that we're going to come down to this weekly 68 billion, which means that all still have a good 12-13% of downside before getting some kind of a decent reaction. And I would have a similar kind of game plan for odds. Just pull out some faves. 382. Yeah, so probably these highs over here, 80 billion, something like that. If we can manage our risk from this higher level over here and play this move to the downside. And if we reclaim this level, this 80 billion level, then I would want to flip my bias and think about the fact that we are turning former resistance into support and start looking for upside. But for now, this is quite corrective, guys. These moves have been very, very strong. You can see how impulsive they do look structurally. So I think for now the local top is in, and we are going to be looking for bounces to trade this to the down. Here's a look at the Bitcoin chart. This is what I had projected on Twitter for a target of essentially 8440, but you know, the 8300 level is what technically the flag target comes to. And essentially if we look at it, it is manifesting pretty accurately for now. And if for those who are in the Discord, they know that I was shorting BSV and BCH at the top over here. I hedged my BTC over here, and I hedged my spot position over here. And if you want to understand why I did that, it is because of the shape of price, guys. You know, everybody looks at price in a different way, and I really like to look at price with the context of how it is shaped. And if I will just hide this, it was basically because of how vertical this structure was. You know, on a lower time frame, we did not get any kind of a complacency shoulder, which reflected a lot of weakness. And eventually we did get a complacency shoulder, which is decent, you know. So we did get about a 618, slightly higher retrace of this first impulse. So it did reflect that yes, this is not ready to completely die, because if we were too weak on BTC, then we would have not made this higher move up. And essentially just from about the 0.5 or the 382, we would have made the second impulse down. So this does reflect that BTC is not there to absolutely and completely die, and this may not be a long-term top or a crash cycle structure, but nonetheless for now it is still distributive in nature, because you can see that we have made an impulse, we built a flag, and we have broken below it. Of course alts are much weaker, but for now it's the same thing. I mean, essentially the criteria for me when I had taken hedges over here was this to start finding support over this 9200 level. And I did think that yes, once price starts finding support over this level, there is no all these players basically who have sold have been taken out, and you know, we are ready to go up. But we did not get that. this was a very nice place to be managing risk for downside, guys. But essentially more so for alts, because if you saw the first move, they did move much harder than BTC. So it was going to be probable that the moves for alt USD was going to be better than the moves for alt BTC. And currently for BTC, it's the same game plan as the total market cap and the alt market cap. Essentially, I'll be looking for alts to kind of catch this move, but it is possible BTC comes and takes these highs. So if we do end up getting either a rejection from this confluence level of the weekly level with the 0.5, or we quickly come up to take the highs over here, still looking to at least get these targets on BTC of 8440 or even possibly 8300. So what we're doing here is looking at the previous halving, and what you want to see is we did have the halving date 6th of July 2016, but just the behavior of Bitcoin and of alts against BTC, the overlaid orange is alts against BTC. So what you want to see is that 22nd of May, Bitcoin embarked on a run from about 430 to almost doubled, and it went on its own with alt against BTC getting smashed during that time. All right, but it essentially topped out 3 weeks before the halving. All right, and what did we get right at the halving? We got a strong move. I mean, essentially it was a 5 to 6% move, but eventually we did get even a stronger move right after the halving, and then we got a bit of a consolidation where this entire move that BTC had, that corrected, and we got a consolidation after that, and we eventually moved up. You can see alts against BTC topped out and eventually made new lows before rising up again. All right, so this is just past performance is not going to reflect what is going to happen right now, but essentially it gives you perspective of this over bullish nature of the market and how that can be used by the most sophisticated players in the market, because the sentiment, again guys, it's just imagining a one-way street. People are buying Bitcoin for their families, traders are getting calls from others to buy Bitcoin, and that is the time, the first point of generated interest is the time where sophisticated money can take advantage of the situation and allow price to do what it has to, so that the sentiment is something to be a bit cautious about. Another thing to be cautious about is how strongly alts against BTC is moving to the downside. So a lot of that is reflecting there is a possibility that we do get this midterm correction, which people are just not expecting on BTC. So I'm just showing you this just to get some perspective on what happened last time and how things worked out. I mean, if you were there, you would know sentiment was quite similar, in its shape, and it can allow price to do this, guys. So just be aware of that and stay safe. Just a quick look at alts against BTC. That I had projected this at the Feb top, and this is what I was telling people. I was screaming it and met with a lot of skepticism that this is potentially what could play out. And how does it look now, guys? How you tell me how this looks, and if it looks like it is a manifestation of this, because you do know post halving last time alts against BTC did take a big hit as well. I do know structurally it's a bit different, because last time we didn't have a very well defined bottom. Right now we do, so I would not bet against this falling out, but nonetheless it has built a very interestingly similar structure, and we have been able to play it to the downside in a similar kind of manner. So for now, I mean, I would say that till this bottom has proven itself, it's a nice place to manage risk, to get some kind of place. But you can see that this thing is currently in a very strong downtrend, so you'll be really playing against the trend. But if you do see this bottom getting taken out, just remember guys that these are fractions, so it's not going to zero, but it can go to quite a low fraction of what it is. So just something to keep a lookout for. But do know that I was screaming out in February that it is a decent amount of probability that something like this is playing out, and it has manifested. So I mean, we are getting to the lows, so if you want a counter wave structure eventually to play some kind of a bounce from, you're most welcome. But just remember, if this gets taken out, don't be too excited to look towards the long side. Moving on to traditional markets, here we're having a look at Dow Gold. This is just to look at our risk on and risk off parameters. And last week I had told you we had made a lower high and a lower low, so to exercise caution. But markets are what they are, guys. They ended up going right back to the tops, and essentially this looks like a flat, almost a flat but a broadening wedge kind of structure. But nonetheless, it is horizontally, if you look, this is a range with this as the low and this is the high. So I think if this is taken out, this 14 level is taken out, you can be looking for further downside, at least to these lows right here. So for now, I mean, the last 3 or 4 days has reflected quite a bit of weakness. I had mentioned market breadth before. Market breadth is still the same, where all the participants are not taking place in this rally. They're not taking part in this rally, and when that happens, you do need to be cautious, and the structure is looking a little bit distributive and looking like, just like crypto, that it needs some more downside to find some kind of support. So first, for now, we're going to be testing these lows, but eventually if they do get taken out, I think there is more downside to this. So here's a look at Nasdaq, and we have made a pretty interesting structure right here. This is a 3 drives pattern, taking out some equal lows right here. This is big liquidity, the March highs, and took them out after a 3 drives pattern and made a very strong move. This is on the 4 hour, guys. So essentially we got about 7 or 8 red 4 hour candles and a consolidation and a couple of strong red candles again. So this is quite indicative that there is a lot of interest in playing this to the downside. This was another strong down move, guys, but we got this 3 drives pattern, to catch another short squeeze right here. But nonetheless, this does smell like a correction. But what I would say is that if you are not in already, there is place to manage this from, but you would need to wait for bounces. If not, this 2020 yearly open, or at least this wick up here, it looks like a decent place to be managing risk from for downside. But if you're not in a hurry, this is a swing failure pattern, and this is the low from where it is formed. So you would have to look for a break of this level to actually look for a safe play for downside. Indices have been, they have been trending up for, I think it has been more than a month now. And the thing was that I did talk about that 50-day period, and we are close to the end of it, and you can see that selling interest has reappeared. And the other thing is that the sentiment has also flipped to where people are thinking that, the money printer can keep on taking this to the upside. So we have a couple of things that do support a bit more of a correction in these markets as well. Then now it just depends on where you find places to manage risk. You want a safer play, you wait for a break of this and you catch a retrace. But if you want to, you watch for this retrace and you can manage risk from this, though it would be very early. I think as long as we are below the yearly open and looking for further downside, you can manage your risk from at least from this highs up here. So do look for that if you want to be safe. Catch cash when once price trades below 8400. And of course tech is the strong one, so you should not be looking to short the strength. Essentially you should be looking at, possibly if you want to short an index, then the Russell, which is much weaker and essentially reflects the market in a more truer way, because it doesn't have any big names that pull it up and push it down. It is much more evenly distributed, so you can see a bit more weakness, like I did show in the previous market review. So if you do want to short an index, then that's the one that would give you more downside. So here's a look at gold. Congrats if you got this, because this is exactly, it played to the plan. I did tell you if you missed it, there was no point in catching it and to wait for another retest of the yearly open. We got exactly that at the end of last week, and now we have made an impulse from the yearly open level. So this does look like it has built a nice structure after a big move. So it is structuring itself out to attack this quarterly level, guys, and I think if this is taken out, there is further upside to gold. So for now, still bullish on gold. I think unless this structure is broken to the downside, there is no need. I think these are very nice levels to be managing risk from, to be looking for the upside. So here we're looking at the US dollar in relative to 7 other major currencies. And what you can see is, I did point this out before, that we have broken out of essentially a 17-year-long base, guys. We broke out of it, and last month all we did is we tested it. So this is basically the monthly block that has been holding this entire base down, and what we've done is we've broken out and we have retested it as support. So this is a break and a confirmation, and a good place to be managing risk. The bottom of this retest, which is also the middle of this order block, is a great place to manage risk. I did highlight this in our Discord, and essentially now if you look at it on the lower time frames, so here's the 1 hour, you can see that we were diverging very strongly all the way down, and we have made the first impulse out of it. And you can see that the dollar moves in some kind of similar structures, where there is a lot of divs on the way down, and then we have a big impulse, then a bit of a consolidation, and then we have to see what price has to do, and if this has to prove itself right now, or if it needs some more time before it can show itself. But essentially this is a nice structure. If it breaks out of this, I cannot draw it cleanly, it's a relative index, so it moves a little differently, but it is a nice looking structure. And if it does break out of this, this is a dollar play then, guys, and essentially the dollar would be not only, it will be impacting all the markets, that the emerging markets, it will be impacting commodities. So I think this is actually the thing to be looking at. This is the dollar what you should have your eyes on, and if the dollar starts finding strength, I think we would see bigger corrections in all markets, including commodities. I cannot say exactly how gold would perform, but essentially I think everything that is pegged against the dollar would take some kind of a hurt. So just keep a lookout on this. Keep a lookout on whatever dollar index you follow and what you perform and what you look at. But this is key right now, this shape and the structure that we have, and the place where the dollar is and what it has actually done, breaking out of a 17-18-year-old base and retesting it as support is a big thing, guys. If this gets followed through and this gets continuation, we could be in for some really nice moves in the forex world. If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!